Our next guest says that today's shareholder meeting will be critical in another way. It will remind investors of the growth opportunities ahead for the stock, like we just said. So joining me now is Dan Levy, the senior research analyst over at Barclays, covers Tesla. Dan, the conversation with Phil, he talked about some of the lofty goals that are out there. Is this a scenario where Tesla, if it does reach those goals, is a company that should be paying Elon Musk $1 trillion or near that amount in compensation?
Hi, Dom. Thanks for having me. Yeah, look, I think what we've generally said is if Tesla can achieve an $8 trillion valuation, which is roughly the upper end of the market cap milestones, Elon deserves that type of compensation for what they're generating. And specifically, it's not just the operational milestones of the 1 million bots or 1 million robotaxis that are being deployed or the vehicles sold. Really, it's also the profitability metrics that the last three profitability milestones are $400 billion of EBITDA in a 12-month period. That's really unprecedented. So to achieve that, obviously, if they can do that, the company will be worth a lot more.
What exactly is going to be, from a research analyst's perspective, going to be the most important part of that value-added drive to reach the hypothetical $8 to $9 trillion market cap mark? Is it going to be in electric vehicles? Is it going to be in robots? Is it going to be in autonomous driving and robo-taxis? What's going to be the primary driver, in your opinion, of a potential hypothetical $8.5 trillion value?
I think they've laid it out pretty clearly. The future growth of this company is not automotive. Auto is one element of the milestones, and it is obviously the driver of all of the earnings today. But the future growth, they've been pretty clear, is driven by physical AI, right? And so it's that application of AI, and whether it's in bots or whether it's in autonomous applications, be it robo-taxi or consumer applications of autonomous, they're clearly sending you the message that that's where it is. There very well may be other end markets they can pursue that are adjacent, but it's an AI push.
All right, Dan, one last question before we let you go. You have a hold equivalent rating on these shares right now. What would happen, or what would need to happen, for you as an analyst to say this is a buy equivalent?
Yeah, I think, the hold rating does reflect the fact that from a current fundamental standpoint, the stock is obviously quite full. Earnings today are being fully driven by the automotive business. We do have earnings that are roughly flat next year. We do see negative earnings revisions ahead. But we're also mindful that the automotive piece is increasingly being de-emphasized by the market and really is about the growth aspects ahead. Look, the growth elements that they have ahead, they're very ambitious, and we need to see more on how that growth actually plays out.